Hello folks, welcome to Edupedia World and I am Abhinay Gupta. So today we'll continue with the topic, the producer company. We have already had few lectures on this topic in which we have already discussed the list of the various sections, section 581 and the continuing alphabets. We have seen what are the important sections on which you have been repeatedly asked questions in your past examinations. Then we had discussed section 581A, the definitions of producer, producer company, patronage, patronage bonus, etc. Then we had discussed section 581B, which dealt with the objects of a producer company. There were 11 objects, and any producer company to be incorporated, it has to be any one of them. The object has to be any one of them, right? Then we discussed about section 581C, which was the incorporation procedure, where we had seen who makes the application, what does the registrar check, and how, when, and what happens after it issues a certificate of incorporation, the payment, the reimbursement to the promoters, and etc. Right? So we have dealt in detail with these topics in the previous lectures, and today we'll move a step ahead with the lecture. If you remember in the previous lecture, while we were discussing about the incorporation of a producer company, we talked about a topic that the producer company is deemed to be a private company, and that is only for utilizing the privileges given to the private company in the Companies Act 1956, but the constraints on the private company will not be applicable on the producer company. Right? So that was the basic description that we had discussed about the difference. So in the lecture today, we'll go ahead and discuss the difference in detail. Right? There are basically 11 points of distinction between a producer company and a private company. Although you have not been asked question on this topic in your previous examinations, but this topic is covered, like this topic covers 3 to 4 pages in your study material, and it has specifically been given. So the difference between a private company and a producer company, although it has not appeared in an examination, may be important. Right? You may not find these differences in the various books of the various authors that students generally follow, but once you pick up the study material issued by the CA Institute, you will find the 11 distinctions. So those 11 distinctions we'll be dealing in detail today. Right? So to start with, the basic difference between the producer company and the private company is in its incorporation. Right? They have the various, they have different bandwidth and different procedure for incorporation and different requirements too. So when a producer company gets incorporated, it uses the word the producer company limited, whereas on the other hand, when a private company gets incorporated, they use the word as apostrophe, which is private limited. Right? That is the nomenclature difference. To incorporate a producer company, you need at least 10 members, the producers whom we call, right? Whereas in the case of private company, the minimum requirement is just 2. You have a requirement of minimum capital in the private company, which is rupees 1 lakh. There is no such requirement in a producer company, right? The objects of the producer company is defined in section 581B, and you will have to use any one of those 11 objects as defined in section 581B. But you can have any object in the private company, any object which will be the main object, incidental objects, ancillary objects, and a lot of things. So this is primarily the difference between the private company and the producer company when we talk about its incorporation. Right? And you have seen, and as I already told you, that so far as the provisions are mentioned in section 581, they will remain applicable on the producer company, and they have an overriding effect on the other laws. But if there is a specific topic and section 581 fails to cover it, or there is no specific provision in section 581, then you will have to refer to the respective law, and whatever is given in that law relating to that particular provision, that will be applicable. So wherever you have mentioned in detail, like the requirements of 10 producers using the word producer company, these provisions have been expressly given in the sections, right, about the incorporation. And other things that are not given will pick those points up from the private company, will utilize the privileges of the private company if it is not expressly mentioned in the section, right? So next topic is the management. Now, how is the management of a producer company different from the management of a private company? Now, what is the management body of a company? Who are the managers? It is the company, whichever it be, either the producer company or a private company, it is managed by the board of directors. Right? So difference in management will basically reflect the difference in the board of directors. So as far as the producer company is concerned, the minimum requirement, the minimum directors in a private company should be 5 and the maximum limit is 50. Whereas the minimum in a private company is just 2 directors. They can work very well with just 2 directors. Right? Then the tenure for the directors in the producer company is minimum 1 year and a maximum of 5 years. Right? And whereas the tenure of the directors in private company is not fixed by the law. The board of directors in a producer company can appoint an additional director up to the maximum limit of 1/5 of the total number of directors. Whereas in a private company, you can have additional directors, you can have alternate directors, you can have directors for filling up the casual vacancies and all. Right? In producer company, you just have additional directors with a limit of 1/5 of the total population of directors. Right? Then when we talk about the powers and the functions, and the powers and functions of the directors in a private company is specified in section 292. You have all the powers over there. And there's, right? Whereas the powers and sections of a producer company, as we've already discussed, if it is specifically provided, we'll follow it. Otherwise, we would have followed section 292. But since there are express provisions in the section, like you have the powers mentioned in section 581R, right? The powers of the producer company, right? And if we talk about the vacation of the office of director, it is provided in 581Q, right? And also, what are the various matters that can be transacted by the board only in the general meeting is also specifically provided in section 581S. So these are the various specific provisions that you'll have to follow, that has to be followed by the private producer company. So if there is a specific provision, it is different from the private company. The liabilities of the director would be joint as well as several, right? And they will be in addition to the liability provided in other law, right? It will not knock off. Whereas in the case of a private company, there is no additional liability for the directors, right? So these were the basic differences when we talk about the management. The next difference that we will be discussing about is the difference in the general meeting, in the holding of the general meeting. So as we already know that a general meeting, that the first general meeting in the private company is to be held within 18 months from the date of incorporation, whereas the first AGM for the producer company should be held within 90 days from the date of incorporation. So that is the difference in the date of holding the first AGM, right? And then there is also a difference in the notice that they send. The notice for the meeting, for the general meeting in the case of private company, is to be sent at least 21 days in advance, right? Whereas this limit of 21 days comes down to 14 days in the case of producer company, right? And now when the notice for the AGM goes, which is 14 days before the AGM, that notice will also be accompanied with the minutes of the previous AGM and EGM if it has been held. Like, we are not talking about the first AGM, but for subsequent AGMs, you will have to give the minutes. You have to send the minutes of the AGM and EGM, right? And the quorum in the case of a producer company is also different. It is about the 1/4 of the population of the directors, right? So this is a difference when we talk about the general meeting. Moving ahead, we have the differences in the share capital and the members' rights. So as far as the share capital is considered, the share capital in the private company can be both equity and preference, right? But in the case of a producer company, it has to be equity specifically. Right? They can have no preference shares. Then if we talk about the proportion of the shareholding, then there is no restriction in the private company, right? It depends which member wants to hold what. But in the case of producer company, the company holds the share in proportion to their patronage, right? And we have already discussed what patronage is in the first lecture of definition. I would like to repeat it for those who don't remember it. Patronage basically is the service offered by the producer company to its members. So the quantum of service that the producer company gives out to the member will determine the quantum of the shares held by the members, right? And then when we talk about the members' rights, the rights of the shareholders, then the members in the producer company are distinct, right? Actually there are some members who are categorized as active members, and active members are those who fulfill the quantum of the patronage as required by the article. So if there are members who attain the priority to be an active member, right, they have some special rights, right, and their shares are transferable. They can transfer the share to some other active member, but that will be done at the par value and also subject to the prior approval of the board, right? Whereas transferability of the share is restricted in the case of a private company, right? And the nomination over here is voluntary, whether or not they want to nominate somebody, but the nomination facility by member is mandatory in the case of a producer company, right? And if we talk about the voting power, then irrespective of the shareholding, every individual will have one single vote in the case of a producer company. But when we talk about a private company, it will always depend upon the article of association, maybe by the number of shares, maybe by the number of shareholders, whatever it be. Like it is specifically provided in the article. But in the case of producer company, you don't look back to the article. It is straightforward, one person, one vote, right? But if you have the producer institution as your members, then it may be different. For the first year, it will be with the amount of shareholdings that they have. It will be in the proportion of shareholding. And in the subsequent years, it will be the amount in the proportion to what they support to the producer company, how much they involve in the business, what is their contribution to the producer company. That will be the basis of their shareholding, of their voting rights, right? Moving on to the next point, that is the loans and investments. So if we talk about loans and investment, private companies are not allowed to give loan to its members, straightforward, right? They are not allowed. But yeah, they can give loans to their directors, right? And in case of a producer company, loans to member can be granted, but that will only be after the approval by the members in the general meeting. So in the private company, it is completely restricted, whereas in a producer company, it is relaxed, subject to the approval in the general meeting, right? And after loan, if we talk about investment, then section 372A, the section for the intercorporate loans and investment, is not applicable on private company. That is a specific section given for the public companies only, right? Whereas in case of a producer company, you can make investment. If you have a general reserve, it will be invested in specified securities, and otherwise the investment, if you want to make an investment to other companies, right, that will be a maximum of 30% of the aggregate paid up share capital and free reserve. 30% of you individually, or even if you include the subsidiary, right? And whereas in the private company, there is no case of investment. Section 372A does not apply on the private company. So this is the basic distinction between loans and then investments. Now we move on to the sixth point, that is finance, accounts and audit. So talking about finance, accounts and audit, both the private limited company as well as the producer company, both of them shall keep the proper books of accounts, right? And they will have internal audits, both of them, right? And that will also be done by the chartered accountant. So this is a similarity. Now where does the difference step in, right? The difference steps in when the chartered accountant gives out the audit report, where in the case of a private company, the auditor's report shall be subject to the provisions as specified in section 227, right? You have a specific sections for the report. But in the case of producer company, although you follow all the provisions of 227, but additionally, right, the chartered accountant will have to report on matters like debts due, bad debts, verification of cash securities, the donations, etc. Right? Now, if we talk about donations, then in case of the private company, they have no restriction in making any donation and any subscription. But you have a limitation of 3% in the case of a producer company. Right? A producer company is allowed to make subscriptions and donations, but which should not exceed 3% of the net profit of the financial year, immediately preceding the financial year in which you are planning to make the donation or subscription. Right? Now if we talk about the political party, in case of private company there is a restriction, right, covered under section 293A. Right? It is subject to certain restrictions, but they can contribute or donate to political party, right, for the purpose specified in 293A. But in case of a producer company, it cannot donate directly or indirectly to any political party for any purpose. So it is a complete restriction, right? It is like a no. You cannot even donate a single penny for whatever reason. But section 293A is a specific reason, specific section provided for the private company, right? So in this case, although there is no particular section about the political party donation in the producer company, but still they have expressly said that they won't make any donation to the political party. So we won't refer to section 293A in the case of a producer company, right? Moving ahead, now we see the differences in the penalties. So now if we talk about penalties in the private company, for different genres, different sections and different acts, you have different penalties mentioned in each of the sections, wherever penalty is leviable and applicable. But if you come back to the producer company, all the penalties are expressly provided in section 581ZA, right? So if they are provided in 581ZA, you don't refer to the provisions given in the Companies Act for the private companies, right? That is all about penalties. Now if we talk about amalgamations, mergers or divisions, right? So what is the specific difference when you go ahead to amalgamate? Now for amalgamation, the procedures may not be very different, right? But the authority who has the jurisdiction changes. Like if you talk about the producer company, right, then the jurisdiction over the administration of the scheme which you have prepared for the amalgamation will lie with the registrar of the company. It has the entire jurisdiction, right? But if you want to file an appeal, you will file an appeal to the High Court. But in case of a private company, the registrar's role is not taken into consideration and the entire jurisdiction lies with the court. So this is the basic difference when you talk about amalgamation, merger and division. The difference lies with the person or the body who has the jurisdiction. So in case of producer company, it is the registrar. In case of a private company, it is the court. Moving on to the resolution of dispute. Now whenever there is a dispute in the functioning of the private company and the producer company, how will that dispute be resolved, right? So that is where we see the distinction, where we see the difference. So in the case of a private company, right, the resolution of dispute, like in the case of operation and mismanagement and stuff, will be handled by the company law board, and that will be covered by section 397, 398 and 399 of the Companies Act 1956. That is the old act, right? Whereas if you refer to the producer company, there is no play of the Companies Act. The Companies Act does not come into the scene, right? So in the case of producer company, any dispute is settled by the Arbitration and the Conciliation Act 1996. So in case of private company, you have the Companies Act, right, with the supervision of the company law board, whereas in the case of a producer company, you have the Arbitration and Conciliation Act 1996. So it is a difference in the act for the resolution of dispute. Next are some miscellaneous provisions. Now what are the difference? So when we are talking about the miscellaneous provision, we are basically talking about the striking off of the name. So in both the case, the name will be struck off by the registrar of the company, and they will do it under the provisions of section 560 of the Companies Act itself, right? It will be in both the cases. But now if you talk about the differences, the provisions relating to the producer company shall have an overriding effect, right, over any such act or law which is being enforced for that moment. So if there is anything expressly provided in the provisions of the producer company, that will prevail. But in case of a private company, will strictly follow section 560. They will have no overriding effect on any law in the time for the time being in force. Now we have the last point, which is the reconversion of the companies. So reconversion is applicable in both of them. In the case of private company, it can be converted to the public company and reconverted to the private company. And in the case of a producer company, the producer company can be converted into interstate cooperative society and reconverted to a producer company. So that is the basic difference. Both of them can be reconverted, but into some other company. One is the public company, and for the other it is the interstate cooperative society. Right? So these are the basic 11 differences that we have seen. The difference in incorporation, management, that is the board of directors, the general meeting, when will it be held and what are the provisions for voting, the share capital and the members' right, loans and investments, finance, accounts and audit, where you have very minor difference, the penalties governed by different sections, that is it, amalgamation, the difference is in jurisdiction, resolution of dispute will be governed by various sections, miscellaneous provision will deal only with the striking off of the name, right, with section 560, which is the common, and reconversion of the companies there the difference lies between reconverted to whom or from whom, right? In case of producer, it is the interstate cooperative society, and in case of the private company, it is the public company. So that is the basic difference that we were talking about between the producer company and the private company. So this has already been a very long topic, and I think we should be winding up the lecture over here. And for the next provisions, continuing with the next sections, we'll start it in the next lecture. So until then, stay tuned. And this is Abhinay Gupta signing off. Thank you.